a very, very intelligent question. That how will you help the startups? You can have rights. Okay, you put in money. Money is fine. I worked for MTS India, where I headed the treasury, and I was CFO of Guggenheim Partners' own company. Um, I am a mentor and entrepreneurship cell of IIT Mumbai, IIT Delhi, IIT Chennai, ISM Dhanbad, and also I am a venture advisor with Loyal VC. It's a $15 million venture capital fund based in Canada, led by a management which is trained from INSEAD Global School. I'm also a partner with GSD Venture Studios, which is a Silicon Valley based venture builder. So to start with, global venture capital ecosystem. Let me first tell you a bit about the global ecosystem. So the US currency is dollar, and dollar is the world's reserve currency. And uh, the US, the whole system, the global financial system was set up in 1940 when Bretton Woods conference had happened and International Monetary Fund was set up. Before that, each country used to keep gold in its reserves and support the currency by gold. So any citizen could go to the reserve bank, give the currency and take gold. But after 1940, this system was abandoned and each country could print as much currency as they want. So what the US did was, it uh, earlier pound, US UK pound was used to do the trades. But after Bretton Woods, dollar became the global reserve currency. And US struck a partnership with Saudi Arabia that Saudi Arabia will sell its oil in dollars. It will take dollars for the oil it sells. Now the entire global economy used to be running on oil. So the demand for dollars became very high. And because the demand for dollars became very high, so the value of dollar became very high. So the US devised this system that it could use the dollar to buy commodities, to buy products from across the world. And that system is still going on. It has been 70, 80 years, but still the dollar is the reserve currency. The US prints dollars, and that dollars are used by 50% of the global economy to do the transaction and to trade. Uh, Palak, can I ask you something?
Yes, sir.
Can I mute the other people, like anybody who is not on mute?
Sorry, sir.
Can you mute other people?
Okay, sir.
Okay, right. So one thing which major thing which happened in global economy was that uh, China and US, they struck a partnership in 1980, and the partnership was that China will the almost a huge amount of manufacturing will move from US to China, and China will manufacture uh, all the products required by the US, and it will take dollars, and those surplus dollars which China has, it will put back into the US treasury bonds. So I am selling, if I am China, I am selling all my products and services. I'm getting dollars. And since I have large amount of dollars which I don't need, I give it back to America, and buy US Treasury bonds. So this became a global system which is running for the last 40 years. Uh, China manufactures products for America. America gives its dollars, and those dollars come back to America in US Treasury bonds. So this system is means that China has huge number of dollars to spend on infrastructure, to spend on anything. Now, because of 99.com bust and 2008 Lehman crisis and 2020 COVID crisis, a lot of uh, uh, many of the economies were going down. So the US, to save the economy, it printed a lot of dollars, because if we would not have printed a lot of dollars, then the global economy would have come into a recession. Recession means negative GDP growth rate. Negative GDP growth rate is called recession. Now, because US is printing a lot of dollars, Europe is printing a lot of euros, Japan is printing a lot of yen, and China is printing a lot of yuan. All those currencies are getting into speculation. And speculation means stock markets, commodities, cryptocurrency, uh, real estate, any all of these things. So the rich people, they earn money by utilizing money, by investing money, and that has meant that the global rich are used uh, uh, to earn money by putting money in speculation like stock market, real estate, and so on. And because this whole system works on extra amount of currency available uh, with the rich countries, so there is so much money going around in the system that it is creating bubbles. So the US stock market is a bubble, Chinese real estate is a bubble, cryptocurrency is a bubble, commodities are a bubble. All that money is going into speculation, and the prices, asset prices of gold, copper, zinc, silver, cryptocurrency, real estate, stock market, Indian stock market, US stock market, it is high. So because all these things are high, so what happens is the return available on these speculations is becoming less and less. So there is so much money. If today I were to put some money in US stock market, I don't know whether I will make money or I will lose money, because the speed at which it goes, the stock market goes up, it comes down even with a higher speed. So fear and greed. It is said that stock markets run on fear and greed. So either it is too much fear, then suddenly it collapses, or there is too much greed, it goes up. And so somebody who wants to earn money by his money, then if he invests the money in the fixed deposit in a bank, then he gets in the US 0.5% interest rate annually. In 1 year, 0.5%. If he invests the money in Japanese yen in a bank, he has to pay the bank. He has to pay the bank to keep his money. There is negative interest rate. In Europe, the interest rate is 0.25% per year. So all these factors have meant that Palak, this yeah. Uh, so all these factors has meant that uh, one is chasing returns, and so venture capital has developed as an asset class. It means that you invest in new companies which have created something new. You invest in unlisted companies whose shares cannot be sold easily as in a stock exchange, and that investment is called venture capital. Now, venture capital is a very risky investment because you are putting money on new people who are creating a new business, and the risk is very high. You really don't know whether the business will do well or it will not do well. But uh, there is a portfolio approach. The portfolio approach is There will be 10 companies I will put money. Out of that, 7 companies will close down, or 6 companies will close down. 1 or 2 companies will be average, they will be just doing business. And the other 2 companies, one of them will grow 300 times, 400 times, the other one will grow 20 times, 30 times. So on a portfolio basis, my return will be very good. This is the reason I have been explaining in the last 12 minutes about the global economy. I wanted to explain to you how venture capital has come as an asset class. Now, if you look at the statistics, just a minute, please. If you look at the statistics, then you will find out of the returns generated by commodities, by gold, by stock markets, by forex, like betting on currencies, and the new age stuff, which is cryptocurrency. So whatever the returns which have been generated, the statistics say that the best returns have been generated by venture capital. So I'll give you an example. Sequoia Capital, which is the US fund, it invested in WhatsApp, and it invested when the valuation of WhatsApp was hardly $50 million. In 2-3 years, WhatsApp grew very big, and Facebook wanted to buy it out, and Facebook bought it out for $19 billion. 19 billion. So the investors who had put in money in Sequoia's fund as a LP, as a limited partner, imagine the kind of return they would have got from Sequoia. $50 million going to $19 billion. So it is because of these kind of returns that the global rich, the global upper middle class, the global middle class, and the lower middle class, everyone wants to invest money in venture capital. So everybody has become an investor. You talk about rich people, you talk about industrialists, you talk about salaried people, you talk about dollar bankers in Singapore, Hong Kong, you talk about housewives of rich families, you talk about politicians, lawyers, CAs, doctors. Everyone wants to invest money through venture capital in startups. But let me warn you, I'm sure all of you want to become successful investors. You want to learn this whole art. But let me warn you, those who don't understand business sectors, business markets, those who don't understand investing will end up, they might suffer losses if they do it without understanding. So today I prepared a small presentation. I will explain to you, if you become an investor, then what should you look out in a startup? What are the factors you should look out in a startup? Let me just show you. Okay, so I'm presenting, first of all, okay, I'm presenting my screen now. Yeah, so I will share one slide with you. This slide is, what do investors look for in a startup? Now, the first thing is problem statement. what is the problem you are solving? What is the need, the human need which you are solving? So if you are bringing out electric scooters, you are solving an environmental problem. If you are creating an app like Uber app, you are solving a major problem that we are not able to find taxis. If you are, uh, excuse me. Now, the problem statement of yours should be such that it affects human beings in a major way. People, they create all kinds of things. So, startups, when they come to me, sometimes, they have thought of some fancy thing, but that fancy thing doesn't solve the some major problem. So then the business will not become sustainable. The business has to sustain itself. Then the solution. Investor will want to know the problem and the solution. Then the team behind. The team should be evenly balanced. It should have finance, technology, product guy, marketing guy. So, it should be evenly balanced. Market size. Now, one of the companies which came to me, they had developed a technology, but they were addressing geolocational problem in OOH market, out of home market. The billboards you see at airport, the advertisement billboards. So it was solving the digital billboard problem of location. So they were solving through technology. But the problem is the whole digital OOH market in India is 100 crores. So even if they become the leader in that sector, they will be having a turnover of 50 crores, 50% of the market. 50 crores is nothing. What valuation will the company get if it has 50 crore turnover? From the investor point of view, hardly anything. So market size is very important. Then the product which you have created, uh, the unique product, like that India, a lot of resumes are fake. On Naukri.com, people say we have done this company, we have done this experience, but many times those are not correct. And there is fake educational degrees also. So a company had come to me. They have used blockchain to create career profiles and academic profiles of people, and on their HR website. Now that in blockchain you cannot erase any record. So whatever is the history and legacy of anything, it is on record. So they were using blockchain. Now that is a brilliant use of technology to solve a problem in the market. If any HR head is there, he wants to see resumes. There are 5 openings. Then he would want to use this service, because in this service, technology is being used to weed out the fake profiles, and that is a big benefit to the HR person. Then the business model. Business model means how will you earn money from that concept. So then the traction. Traction means what is the business you are already doing on the ground. There is a company which came to me. So their traction was 25,000 rupees. 25,000 rupees turnover, which is hardly anything. Sorry. So I told them to increase their traction. And uh, one of the problems we faced from venture capital funds when we took this company to them was the traction. That 25,000 is very less turnover. Either you should have 10 lakhs, 20 lakhs, then you can say, yes, this is a solid financial model, business model. So traction is important. Then competitor analysis is important. To understand what you are creating, it is very important to know which competitors you have. Then competitive advantages. See, if you are giving the name of competitors to the investor, then you have to also tell how you are better than them. Otherwise, the investor will put money in the competitor. So it is very important that you also give the competitive advantages. Then financial projections. Next 5 years, what you will do, how will you increase your business. So this will include revenue figures, operating profit, net profit, the money you have invested, how much you are spending on marketing. So the whole financial model. By the way, we create financial models, we create business plans, we create pitch decks, we do all of that. Then the ask. The ask means what is the amount you are asking from the investor. This is very important because many cases the founder does not know how much he is asking. So the ask is very important. And if you are telling the investor, I need 5 crores, you have to tell him for what do you need 5 crores. So use of funds, that how will you use this 5 crores, how much in marketing, how much in team building, how much in product development, and everything. You have to lay it down. And last, the future roadmap. Future roadmap means that in the next 5 years, how many products you will sell, uh, whether you will file intellectual property, whether you will launch in new markets like separate countries, whether you will increase the team size from 20 to 200. So all this is future roadmap. So this is a brief uh, on what investors look for. Now it's almost half an hour. Uh, I am putting my LinkedIn profile on chat so that you all can add me, and throw the field open for any kind of questions you have on venture capital, on startup funding, on global economy, on cryptocurrency, on blockchain, on cyber security, on anything which you want. And please feel free to add me on LinkedIn also. And this is my email. And happy to hear from you. Palak, are you there?
Yes, sir.
Okay. So
So I
anybody?
have a question.
Yeah.
What are the best sources for funding contacts of corporate venture capital investors for startups?
Uh, so see, who can put money in your company? It can be an angel investor. Now, if you are creating, suppose, a cloud kitchen, then you would want an investor who has knowledge of cloud kitchen, right? Uh, and the investor, angel investor, can be anyone. It can be an industrialist, it can be a CXO, it can be anyone. Second option, you go to venture capital fund. Venture capital fund is like Kalari, Sequoia, K Capital, Axel Partners, Elevation Capital, uh, DFID in India, which is a UK institution. So all these are venture capital funds. So one option is angel investment, other option is venture capital. If you are asking for big money, like $50 million, $100 million, then you have to go to private equity funds. Private equity funds are funds which do big ticket investments, like GIC of Singapore, which is the Singapore state government institution, like Mubadala of UAE, which is the sovereign institution of the government of UAE. Mubadala puts in money. It has put in money in Geo. It has put in money in SoftBank. The biggest venture capital fund which puts in millions of dollars is SoftBank, and SoftBank has a $100 billion fund, which is invested in Oyo, Uber, Ola, Paytm, Snapdeal, Flipkart, all these big companies it has put investments in. Then there is a South African fund called Naspers. Naspers made a lot of money from Alibaba. They had invested early in Alibaba, and later on, Alibaba became very big. So Naspers is one company. Uh, so these are the examples, and Angel this, and you can take startup funding from government also. So the government has various schemes. Startup India under the Startup India scheme. Uh, so they have like 10 lakhs grant, 25 lakhs grant. So they give these grants. Okay, Palak?
Okay, thank you, sir.
Thank you.
So, participants, if you have any questions, you can ask.
So if there are no questions, then um, let me know, Palak. You can also share the questions with Palak and Ma'am Shivani, and they will direct the questions to us. So there is a question: do you work with football? I am an agent for players, coaches, camps, and sportswear. I'm looking for a sponsor. No, I don't work. Uh, I don't generally have sponsors with me. Their sponsors are mostly corporate houses with B2C kind of brands which they want to advertise. So they put money in sports related field like football. I'm afraid I don't have any such contacts. Uh, so if you guys have any questions, just put it here, or you can send the questions over to me on LinkedIn, or you can send them to Palak and Shivani.
Yeah. So, I have another question.
Yes, Palak.
So, like you said, that we can invest in startups. So, in what ways do capitalists get involved with the company? So, it's like we invest. That's our role.
So, okay, suppose you are a venture capital fund. Now, you want to put money in 10 companies and you have $10 million. So, out of $10 million, you will put 3 million in one company, 2 million in one company, maybe 1 million in two companies, and the rest of the companies you put small amounts, $300,000, $500,000. And then your role in the company, you will want to know how your investment is performing. So you need regular reports from the company. So you have rights in the agreement which you sign, shareholders agreement. You have rights that you will get financial statements of the company. You will get minutes of meeting of the board of directors. You can have a seat on the board of directors. You can have an observer status on the board of directors. You can, if your shareholding is more than 26-30%, you can just hold on. Sorry, just hold on. Yeah, sorry about this. Um, so you can have uh, you have all those rights on the board of directors. Now Palak said a very intelligent question, that what will you how will you help the startups? You can have rights. Okay, you put in money. Money is fine. Money, even five people are putting money. But how can you contribute to the company? So how it works is, like, I was helping out Rabo Equity, which is India's number one food fund. to invest in a food company. So when the promoter met Rabo Equity, he said, listen, I already have a lot of money. The promoter had, his company was 250 crore turnover and very profitable. So he didn't have a problem with money. But he wanted to have the benefit of having an international renowned fund like Rabo Equity. So the Rabo guys told him, sir, we will tell you how we will benefit you if we come on your capital table, which means if we take some equity in your company. They said, we have invested in 25 companies. We have seen how these companies have grown in the last 10, 15 years. We understand the food market very well. We are a part of a foreign company, European company. So they invest in European companies and other companies of other countries. We know the best practices of other countries in the food market, that what the companies in other countries are doing in the food market. Then he said, uh, sir, your branding is not good. Nobody knows about the brand, the food brand which you have. When we were working with Dawat Rice, we had got Amitabh Bachchan as brand ambassador for Dawat Rice. And once Amitabh Bachchan came in as brand ambassador, their sales boomed because each Indian family knows Amitabh Bachchan. So they said we can bring any such celebrity for you also. It was a chocolate company, so we could have brought some chocolatey, some guy who has a chocolate image, like uh, any Kapoor or any such guy. So he said, sir, you know your business very well. We also know the food business very well, but you don't know the financial part of the business, how internationally it is played, all the way till the company comes out with an IPO on the stock market. But we know it. We know how to get a company listed at a good valuation on the stock market. We have relationships on the financial sector, which you don't have. So, all this benefit in decision making, benefit in relationships, benefit in best practices, benefit in, seeing which country is doing what to solve a problem, which sector is doing what. All this eagle's eye view of the sector is available to the fund guy, which is not available generally to any promoter or founder. So Palak, I hope you have answered. I have answered.
Yes, thank you so much, sir.
Thank you.
So there are some questions in the chat. So Manju is asking with list of document, the list we require before proceeding
Sir, one
in.
question is there.
Yeah. Saurabh, you type your question on the chat. So Mr. Sanjay has asked, please help with the list of documents before we approach any investor. So you should have a pitch deck. So whatever I showed you, the list of, I just showed you the information needed by investors. All those things are covered in the pitch deck. But the pitch deck should not be 30, 40, 50 slides, 15 slides, because it has to be very crisp. Then you should have a proper private limited company, not a proprietorship, not partnership, not LLP, but a private limited company, because the investor will take shares in your company. Okay. So you should have a private limited company. Am I audible, Palak?
Yes, sir, you are audible.
Okay. And then you should have a financial model. A financial model means your how your business is coming out on an Excel sheet. Uh,
where are your revenue coming in, what are your cost, expenses, working capital, any loans, uh, your cost of capital, everything is linked in an Excel sheet. So if I change any number on the profit and loss account, the all the numbers will change, and I will get a true picture of the business. So that is a financial model. And then a business plan. Business plan is a 25-page Word document which tells you about go-to-market strategy, distribution strategy, about team building strategy, about all these factors. So we help. My team makes a pitch deck. My team makes financial model. My team makes business plan, and it also makes valuation. Now, when you are doing valuation of a company, it is done by 3-4 ways. It is done by market multiples. It is done by transaction multiples. It is done by net asset value. It is done by PECV, which nowadays nobody uses PECV. The best method to do valuation is DCF, discounted cash flow. So uh, my team does valuation through DCF, and so valuation, business plan, pitch deck. These three documents you need. Apart from a functioning private limited company, so that is it. Now next is, what kind of investment is good to start with? It depends from company to company. Like if you are planning a operationally heavy company like Zomato and Swiggy, where you have to recruit people on the ground across cities. So you will need offices, you will need a lot of, it will be operationally very heavy. So if you are creating that kind of heaviness, heavy business, then you need a lot of money. Then if you are starting, uh, earlier starting with $1 million or 5 crores, then probably in the next round you can raise 5 million, then you can raise 50 million, then you can raise 200 million. So, uh, but if you are starting with a cloud kitchen, uh, now it really depends on your vision. If you want to open only 5 cloud kitchens, maybe a local cuisine, then you won't require that much of money. But if you want to become like a Fasus, which has cloud kitchens across India, then you need more money. But starting, not everybody gets millions of dollars in the starting seed round. You get small money. Sometimes you get in lakhs. Sometimes you get 2 crores, 1.5 crores, 3 crores. Uh, those founders who have already done their successful businesses and exited, they get big money. So Kunal Shah of Cred, when he started Cred after free charge, he got $30 million seed capital. Starting, he got $30 million, but it does not happen with a lot of people. Uh, Jitendra Gupta, who had sold his fintech company to PayU, he got $24 million starting seed capital. But otherwise, it is not easy. I mean, if you don't have a track record, you can probably expect less than $1 million, maybe $500,000, 3 crore, 3.5 crore rupees. Next, for getting funds, where should we first approach? Angel, VC, how much equity? How much equity? See, you have to dilute in further rounds also. So if you dilute too much initially, like 30-40%, later on you will feel that I am left with so less equity. So your dilution initially, what we advise to startup founders, that in the first round you should dilute between 16 and 24%. Because if you diluting 26%, then anybody holding 26% gets a right on the board of directors to block special resolutions of the board of directors as per Companies Act. So you might feel that I gave that right to the investor, I should not have given. So 16 to 24% initially. What will be the cost for pitch deck and financial projections? Just write a LinkedIn to me. I will give you the cost for pitch deck, for financial model, and for business plan. Should we approach with MVP to the investor? So you are talking to an investor. Will you feel more confident if you have minimum viable product, or will you feel more confident if you just have an idea? The investor in any case will ask you 10 questions because he gets 20 to 30 companies every day. So a lot of questions are asked from the investor. So basically, it's always good to have MVP, and even better if you have a PMF, a product market fit. If these two things you have, then nothing like it. Then you ask, should we use video pitch deck? You can use video pitch deck 3 to 5 minutes, maximum 5 minutes. I saw a video pitch deck of a agri-tech startup, and I saw of a procurement technology startup, and one more startup. Uh, but if it is not well made, then it looks very bad. The video looks really bad. So it has to be very well thought out and well made. Otherwise, the 15 slide pitch deck is good enough. That will get you the investment. What is product market fit? Product market fit is suppose what minimum viable product is. Suppose you want to create a robo, and you created a robo. The robo has all the functions which anybody will pay money for. That I'm buying this robo for this thing. Now, product market fit is that you not only have the product in hand, but you also have its distribution strategy, its pricing. You have done secondary research in the market. You have done primary research on laptop. You have done the pricing points. You have developed 3 or 4 type of robos. You have done pricing for all 3 or 4 of them. You have decided their distribution strategy. You have decided their marketing strategy. So the whole business is laid out and it is finalized. That is product market fit.
Sir, one thing I have to ask, sir. Sir, if I have developed the MVP, that is the basic model, but even that model is not having the so much consumer are there. Okay, but it will I have to make a complete build up a product. Okay, that is a product market fit. It will take some time because have so many technical requirement is there. So will they will approve investor will approve that one, or will they will invest on that one if we have a basic model of the MVP, just beta version?
So it really depends what you
Because
have
it will cost,
created.
it will having so much cost required for the developing the full-fledged model applications, and we know that if you have to go for that one, it will take a 1.5 years to build up complete applications, and as per the time required, and we need a fund like 50 lakhs or 1 CR or 2 CR to complete build up at a product which will require which will as per the market requirement. So in that scenario, will the investor will interest or not?
See, if you require money to do your PMF, then any angel investor can put money. Angel investor will give you money, but the thing is, the terms at which you will get the money, like how much equity, how much, what are the terms and conditions, the terms at which you will get the money now won't be as good as you will get the money after your PMF.
But sir, the PMF requires so much fund. Then what we have to do?
Yeah, then you
Because
can
we
raise
have,
money now. You can raise money
because
now.
we can develop build a product model, basic model. But for that model is only we can see. But we need so many research, so many inputs has to do, so many technology has to require, and then it will go into full on the level of the market that people will going to interact them. Otherwise, it's just a demo, a dabba. So in that case,
Gaurav, let us do one
people
thing. Let us connect on a call. You
okay,
just write to me on my LinkedIn,
okay,
and
sir.
I will give you my mobile, and we can talk about this because this is specific to your company. I
Yes.
don't even know what your company does.
Okay, sir.
Okay, just write to me. I will give you my number.
Thank you, sir.
Thank you.
Okay, so there are no more questions.
Okay. Okay, Palak. So
So,
I would like to thank you, Palak, Shivani. I would like to thank everyone who came here and listened to me.